And I'm really happy that Stephen is here to lead us through this discussion, an issue that they've researched and worked in, and the participants who are so active in thinking about exactly these questions. So take it away.
Great. Thank you very much. And it's a pleasure really to be here. My name is Stephen Lee. I'm a senior partner with Mercer, and I work here in San Francisco. Maybe I'll just, before we get into it, I'll just ask the panel to each introduce themselves. And I've worked in the M&A area for the last 10 years.
Fantastic. Hi all, I'm Val Rupp. I'm with HPE. Prior to this role, I was with Amazon for several years and then Microsoft. And I've been both on the M&A side as well as the HR business partner side when we're actually receiving in a business that we've acquired and we're trying to integrate them.
Hi, I'm James. I work with Google, and actually I worked at Amazon too in M&A, so we probably have some overlap. And prior to that, I worked at F5, and prior to that, I'm a former engineer. So.
Hi everyone, my name is Roberta Chen. I work at Intuit in the integration group. Before Intuit, I worked at Apple, and before that, I did asset management, equity research, and investment banking.
So, as William said, Mercer works on thousands of deals every year, and about 2 years ago, we went to our clients and we said, so what are the key people issues that worry you in transactions? And the number one issue was retention of key talent, and number two was culture. That's our topic for today. And as William mentioned, we've now done some research on it. We do have that research available out front. If you're interested, you're more than welcome to take a look at it. But it's very rich. And the other thing I think that was interesting is as we started, and William mentioned earlier, I was thinking, you know, we're in the latter half of the second day. Will people still be hanging around? And then in the very first session, on the very first day, when they're talking about business strategy, what two things come up? Retaining key talent, dealing with culture. So this is critical in every type of deal. So I'm excited to talk to the panel about how they deal with retaining key talent and dealing with culture issues. And to start, I'm going to start with Valerie. And the first question I wanted to ask each of the panel is, what methods and tools you've used in the past to retain key talent in acquisitions, both on the executive team as well as other key talent and, for example, salespeople within an acquired organization?
So there are many strategies. I think what it boils down to is flexibility in the way that you're approaching it. So certainly from an executive level, we look at very, very much about the mix that we're delivering, whether it be stock, bonus, retention, base compensation, other factors that might be really relevant to that population. From just an overall employee experience, we spend a lot of time looking at leveling, looking at mapping them across the company and making sure that they are competitive with their peer group. So sometimes we'll see small acquisitions that come in. They haven't had a tremendous amount of funding, so in those situations, their compensation's low relative to the market. So we do try to address those things through the acquisition. And I've seen a number of different things in both Amazon, Microsoft, and now HPE with regards to how that compensation decision's managed. There's certain guidelines within certain companies where you have a threshold of what you can offer in equity. It has to go to the board for review. But without really diving into all of those complexities and limitations, I think flexibility remains the key. And so it's something that we work with the business unit to determine. And then when we present the offers, there's still flexibility at that point. So we're not really addressing what the employee was hoping to get out of that offer, and especially for key employees, we will go back and revisit it and try to make it feel like a win-win situation for both parties.
I think there's a couple things. We definitely, as Justin mentioned earlier, we interview most of the talent, and for most of the deals we're doing, we're acquiring engineering talent. And so Once we've kind of gone through that assessment, we'll then kind of go through and look at what we call ladders and levels. And we'll kind of do our initial assessment, and then we'll sit down with the target CEO and kind of say, here's how we see things lay out. And that's also an opportunity for us to maybe calibrate or readjust based off of something where maybe some engineers don't always interview very well. So there's a way we can kind of double check that or kind of level out better. And that kind of starts to begin to set the process, as Val said, kind of on getting the compensation and those kind of pieces set together. We also, as part of the deal transaction, pretty much as a rule, always look for a retention pool to kind of use as part of the transaction to keep the team there. But I think those are all kind of the mechanics. Where we really focus on for engineering is we try to win their hearts and minds. That's really critical. And from being a former engineering manager, I've had engineers take pay cuts to work on great projects because they think it's really interesting. So it's not all about the money for them. It's really about kind of, will they learn something? Will they get to do something that's really cool? So we really focus on that as a kind of a key piece. And as an engineer at Google, it is one of those places where you are literally kind of running the show. And the tools and infrastructure and the ability to learn and do different projects is very vast. So we do spend a lot of time leveraging that as part of our conversation. And as part of that kind of first sets of dialogues, we also have the sponsors get up and tell the team what we want them to do, because I think that's really important for them to understand. Because I think with engineering, particularly, some of them don't like a whole lot of ambiguity, so the more we can kind of paint out, this is what you're going to be working on, this is what we would like to see happen, that really kind of gets them kind of going, and then the offer kind of comes secondary.
So we have a very talented corporate development team and HR M&A team, many of which are here in the audience, so thanks for coming today, in addition to everybody else. I think that we do work really closely with the HR and corp dev teams on retention and trying to structure it in a way that is attractive to the key employees that are coming over from an acquired target. But I would actually concur with James in that it's not really all about the money at this point. A lot of the people who are in these roles are serial entrepreneurs and clearly will have done, regardless of how the retention is structured, will have clearly done really well in the transaction itself. So it really comes down to a lot of things like, we like to be really collaborative. We like to be really transparent. We like to share up front, this is what we're hoping that you're going to be able to do, but you know what, help us figure out so that we can work on this together. A lot of it is about also kind of selling a vision of what you want that person to do, especially for senior executives. That they really want to know is, am I going to be able to have an impact in a larger organization? How is my life going to change when I'm no longer running the show? And will I still have a voice? Who will I be reporting to? I think there are a lot of other levers other than, in addition to, I would say actually, that compensation that would really help in terms of retaining key employees.
Anything different that you do to retain salespeople? Because they can often be treated quite a bit differently. Any thoughts, comments in terms of what you do different for salespeople? And maybe we'll start at Roberta, anything you guys do differently?
I think we're just really try to be thoughtful about what their current compensation structure looks like and how it matches up to the overall Intuit compensation structure. I mean, we do need to make sure that it is in some way, shape, aligned with the overarching goals of the organization. And so the way we think about it is we will typically keep people on their existing compensation structure for a transitional period of time. And after that, we'll kind of explain what some of the new metrics might be that they would be expected to perform to. And then at some mutually agreed upon time, we would transition over to our overall Intuit sales metrics.
We don't have a whole lot of experience with acquiring sales teams, so that's actually something I'm looking to learn more about, to be candid. I mean, we usually typically leave them as standalone for a period of time, and that seems to kind of allow them to kind of work and continue to maintain their existing culture. But yeah, for them to kind of fold into either Google Cloud or the ads team, those are big orgs, and it's kind of, we have not really unlocked that yet, to be candid. So if anybody's got ideas, I'd love to hear them.
Good.
And for me, we have a sales compensation team that gets really involved in looking at the compensation structure for the salespeople that we're bringing in versus our own. We had actually a really good learning opportunity during a very recent acquisition that we did where when the salespeople were coming over, we ended up closing some of the contracts they had with competitors. And so as a result, they were seeing a dip in their ability to reach their goals for sales. So we had to go in, again, back to flexibility, When we realized the impact of this, we went back in and we looked at doing something additional. So we structured a bonus to be able to be paid out and looked at what it would take to get them back to where they were with their contracts. So it was a learning for us because also we don't have a tremendous amount of experience with sales, but we are learning and remaining flexible if something's not working to go back and try to make it a win-win.
Great, thank you.
If you're interested in additional information on innovation and M&A, I encourage you to check out the Transaction Advisors Institute, which is a robust source for knowledge on M&A best practice.
We host a series of M&A conferences, run an elite M&A academy, offer M&A masterclasses, conduct M&A research, organize the M&A Leadership Council, and publish a prestigious M&A journal.
Members of the Transaction Advisors Institute include corporate executives, board members, and private equity investors that are interested in understanding the critical issues impacting transaction planning, structuring, and execution.
I encourage you to get more involved in the Institute.
So another topic that we wanted to spend time on is culture, and we've all, kind of seen the stats about how important culture is, what it means. Again, Valerie, starting with you, what strategies have you used both at HPE as well as Amazon to address culture issues in transactions, and what have you found has worked well that this group could learn from?
So I have two very stark differences. One, when I was at Amazon. And so we did an acquisition of a fairly large business when I was in the Kindle division. And that business had a very strong culture that we were integrating. And if you know anything about Amazon, one of their values is frugality, and this company was not frugal. So they were quite the opposite of that. They had free drinks, they had free peanut butter. It was just very different. And so it was obvious immediately. They were in an open workspace before Amazon was in an open workspace. They had flags on their desks to indicate when they were free. So it was just a very interesting environment. And so we knew immediately that culture was going to be a big deal for them. Like the whole idea of putting them in an office or restricting some of those bonuses that they received through the workday was just not going to go well. So we specifically were, someone mentioned it yesterday, very clear about what the elements were that we wanted to integrate on. And Jeff has a very strong opinion that he wants us to make sure that we're not mucking with a culture and a business that we're acquiring because of certain value drivers. And so that was what we went in with. So we left them fairly standalone. So there was a lot of flexibility, including we didn't level in that particular situation, which was a nightmare on the HR side. But it was driving towards what we wanted to see from a value generation of acquiring this business. On another note, in HPE, I think what we do really well is we have a MOC team, which is a management of change team, that's becoming much more prevalent in trying to understand the nuances of culture. So we do surveys. The MOC team will go and sit with the senior leadership team. They'll do interviews. We have generated a set of standards and values for HP that we note where we are on a spectrum from our employee satisfaction survey that we do. And so then we're able to see what the gap is, and that's anything from communication to the way decisions are being made. And so we're really trying to do, this is situated around smaller acquisitions, but we're really trying to tailor the experience to what really is going to resonate with them. And then helping them understand our culture and starting that integration early on, but also respecting what has made them who they are. So if they're not used to a heavy self-service culture, which ours is, that is certainly a challenge that we try to help ramp them toward in an easy fashion. So those are two very extreme differences.
I can see the Amazon kind of experience, how that would be. Yeah, we bought Woot, and their announcement was very outrageous compared to what a typical announcement is. If you ever get a chance to see Woot being acquired by Amazon, it's a rap video by a monkey. Highly recommend it. It is the most unusual deal announcement I've ever seen in my life, and it was kind of raised eyebrows at Amazon. But it was their culture, so it was kind of, we didn't want to mess with it. But I think there are some things, like as Justin said, I think looking at what what really changes and what doesn't change. I mean, I think there's kind of some of these pieces where, and being open about it. I mean, if it's a small team coming into Google, I think there's certainly some areas where it's like, this is how we're going to manage that transition, and we're really pretty clear up front as early as, these are things that'll work normally. These are the new things that you'll have that'll make your life even better. And then here's some things that'll be just different. I mean, it will be different. Most of the time, coming from most companies, is a step up. There are a few places where they've had better offices than Google offices, which is interesting in its own right. So those are some of the areas we do touch on. Another one that we have worked on in the past where we've had some, I would say, really radically different cultures is there was a period of time where we bought a couple aviation companies. And in our culture, trying things, experimenting, having things not work is totally okay. We really encourage it. In aviation, when you do that, things crash, and that's usually bad, and it's kind of horrible. It's just so counter to the culture. And I definitely remember in one of the transactions, Sergey standing up and saying, "How many of these airplanes have you crashed this week?" And they just had pure horror, like none. This is not the way we want it. And he's like, "I want you to crash 3 next week." And that was kind of we never got to that crashing of, this is the kite company over in Alameda. We never got to that kind of level of, accepting it, but they did kind of they were more comfortable with kind of raising that. But it was also an opportunity for Google to learn that even in experimental stages, crashing is really bad because the regulators look at that and say, how stable is this thing before I'm going to license it? So there was a little bit of learning on both sides there that I think was unique to us. So yeah, we try to be as flexible as we can and kind of go back to those key value drivers. What is it that we need? Why is it that we want them to be part of us, and how do we protect that?
I think we take an opportunity early on in the process during the diligence phase to really kind of suss out what the culture is like. We've also been pretty fortunate in that a lot of our recent acquisitions have been prior partnerships, and as a result, we were familiar with the teams already. But we do try to take a lot of time to really understand what's important to them. How do they make decisions? How do they live their lives? Because we're trying to take a gradual approach where it's kind of more like a marriage rather than us coming in and saying, and this is how it's going to be from now on. But in order to do that, you really have to spend the time to really understand what makes the teams tick and also kind of what motivates them as well. So it really is a lot of face-to-face meetings, kind of observing what's worked in their culture. We do look at their employee happiness scores. We do have our own employee surveys as well. But what we do is we try, if the culture is, their culture is part of their secret sauce, we do try to maintain it in the beginning and then gradually phase into Intuit's culture, of which we also have a really strong culture. What we will do is we'll have typically an employee engagement plan that the HR team works on, or the HR business partner, which is where you'll bring in, start introducing Intuit concepts like Intuit values, which are win together, move fast or learn fast. And we try to introduce those at the appropriate time and other various concepts that are very Intuit-like so that it doesn't feel like it's something that's being thrust upon them all at one point. It's kind of more like a gradual process. And by the end of the time, when you actually reach it, they're kind of like, okay, I'm ready to kind of move on with the Intuit culture. We'll keep some elements of it that work of our old culture, but for the rest of it, we're okay moving on at that point.
I really like that because, one of the things we also do is we try to encourage Googlers to embed into the new team. So it's just kind of this opportunity to just provide some general surface area, and it's not kind of it becomes why do we do this? It's here's how it works. And it's like all those kind of crazy little questions that are how do I check something in? It's like, oh, here, let me show you. Instead of just, it's just part of your team now. So I really like that blending.
So one thing, just to follow up on that, Roberta, is you said, you have a survey or a culture assessment tool. Mm-hmm. When do you employ that when you're working on a deal?
That's a really great question. So we do it post-close, and here's why. Because we believe that employee onboarding is a huge part of introducing the culture, but also respecting the culture of the company that's being acquired. And so what we really want to do is bring everybody in, kind of give them the basic training, HR, IT, finance, in terms of like how do you navigate the organization, how do you work as part of Intuit, but it's also kind of an introduction to the culture overall. And at that point, we'll usually do it maybe 2 weeks or a month afterwards, because we kind of want to get a temperature check in terms of how people are feeling. It's also a great time for employees at the target company to give feedback. We do have this little box at the bottom that says, is there anything else that you want to share beyond what we've asked you about? And it's actually very illuminating when you read through the comments. And knowing what the feedback is gives us an opportunity to like respond proactively, especially if there are any issues in terms of culture. Like a lot of times, I'll just say, like a lot of times, a lot of companies will come in and they'll be very apprehensive at the beginning. They may have had a bad experience in a prior acquisition, or they just don't know what to expect. And I think that those surveys actually help us really address some of those issues. And it's kind of nice because we continually do those surveys on 3 times a year. And recently, for one of our acquisitions, went back a year later, and everybody basically said, we were kind of scared when you came in a year ago. We didn't know what was going to happen. But we're pleasantly surprised that you've kept all of your promises. And as a result, we're pretty happy as a whole. And so that's what we usually use those surveys and those opportunities for.
James?
We do surveys too. We'll do them, depending on the size, we'll do some as early as 30 days to kind of get that first kind of assessment. We certainly do them at 90 and 180 days. And then usually we also have an annual survey. So we take the acquired team and look at it against the rest of the company to kind of look at that. We also balance out, we actually look at how acquired employees generally work and do well at the company 2-4 years out. So it is something we're constantly kind of reflecting on to kind of see it. Because there is some interesting dynamics where they kind of go through this little bit of a hype cycle. They're all super happy, and then it's like, oh, wait a minute, and then it's like they kind of come back out. So we kind of watch for that. And the nice thing about the surveys is it's also an opportunity to re-engage. There may be some things that are just simple things we can suggest to the sponsor of like, hey, maybe you should have a few more town halls so that you can communicate what's going on because they're a little uncertain. That's an easy thing to fix. To oh boy, they have a whole lot of questions about relocation because we just relocated the team. Maybe we need to go back and look at what the relocation team sent because that may not be the right stuff. So it gives us an opportunity to reflect and kind of reiterate, which is, yeah. And the comments are actually, that's the gold. The scores are interesting, but the comments are just, yeah.
Valerie?
So we also do a survey. We have done it pre-close and post-close. We have the management and change team, the MOC team, will facilitate that. They also connect in and find ambassadors, which are the more informal leaders within the acquiring business. And so they check in with them to get a pulse. We have an integration lead on the business side that's actually joined up to specifically help the acquiring business with any questions they may have, like where do I go for this, or how do I get into this system? So all of these players, including the HR business partner in the business, come together and they share information about what they're hearing from the organization. And that allows us to then, we do MOC reviews with each of the business work streams together, and we share that feedback. We collect more feedback, and we, again, modify our approach during both integration and post-close into business day one. We continue to modify. And then at that point, it gets handed over to the business partner and the business leader to continue these connections or whatever they need to with the business.
The one nugget, back to nuggets and things that I took away from one of these a couple years ago was have the EAs bond and work together because they're the ones who can unlock both organizations' structures. And the sooner you can get the two EA teams or both teams to work really well, it's amazing what happens. So that's like an area that definitely, if it's got the size that you have, that totally makes a lot more sense. Yeah.
Good idea.
Any deal that you've worked on where a culture issue was identified and it ended up being a huge problem that either scuttled the deal before you got to close or scuttled the deal even worse after it closed? And I'll start perhaps with you, Valerie.
There isn't one that has scuttled the deal, although we have identified, this is not with HP prior, that there was a mismatch with the CEO leader of a business. And at the time, the company I was with had a very strong founder's perspective where it was pretty much 100% of the time, the founder was certainly brought over with the acquisition. And in this case, the business leader and I, through due diligence and then speaking to the business leader, we realized pretty quickly that there was a mismatch in his value system, a company's value system. And so what we did is we made the deliberate decision to exit upon close, which was the first time that had happened. And so it was a big deal, but we realized that it would have been disastrous had we brought the individual along. So I think did head off a potential disaster by making that decision. And you certainly, when you're considering that, there's a lot of factors, right? They likely have a very strong following. You need someone to actually take on that role who's within the organization. How do you then maintain through whatever your decisions you're making to retain the additional key players in that? It becomes more vital to bring them along in that case. So there's just a lot of factors that you then have to consider differently when you're making that decision, but it was the right one in this case.
Yep, good, thank you.
Yeah, I was going to say, we've had a few cases where I think that whole deal process is that crucible where you see people, at intense amount of change and an intense amount of pressure. And, I've seen people rise to the occasion and sink. And then there is a case where we had a CEO like you that we actually had extended an offer, and as we went further down the process, we realized this is really not going to be a good fit. And that was the first time we actually had to retract the offer and actually do a little bit of restructuring the deal because they had such a key role in it that we had to kind of pause and reset. But I agree, if we had brought this person on, it would have been a huge burden.
But you still did the deal, you just did it without this key, okay.
I mean,
good.
I think it is kind of getting down to those selective pieces. I can't think of any company, normally it was other diligence matters, not culture. I mean, normally you can kind of figure out how to adjust. Now we had, back to the aviation companies, we realized that was just not our DNA. So I think we definitely exited those both those projects. So I think that was part of it, is also understanding what you do well and what you don't do well.
We haven't had that happen on the recent acquisitions that I've worked on. But that being said, I mean, we do spend a lot of time in the early diligence phase speaking to executives and team members to understand whether or not they would be a good fit or not, and whether their values are aligned with ours at Intuit. And if they weren't, we would definitely make some different decisions based on that.
Okay, so I'm going to open it up and see, get experience or questions from the audience. You might have questions. You might also want to share an experience of when culture was critical in a deal and, either did, change the deal or scuttled the deal or something. So opening it up. Yes, sorry, go ahead. And remember to press down on that mic.
Got it. Can you talk about, back to retaining talent, the use of retention programs? I mean, James, you were talking about, the engineers are key, and I'm assuming that's common between the three of you. But do you pick out select engineers that during the diligence they're just critical, not only to the business but to the integration? And how do you use these retention programs?
So we definitely look, we factor in how much comes from the deal. I mean, that's their reward for what they did. But oftentimes we may actually see the engineering talent different than the executive team does at the target. And that's where it gets a little interesting, where we may be allocating more retention to certain individuals because that's more the engineering direction we want to see. And so that takes an awful lot of conversation and going back and forth saying, this is, making it really clear to both the executive team and then the employees eventually, your previous equity from the company, that's what you did. And this is our retention pool is what we expect you, how we see your value going forward. And there have been some cases where in one extreme, we had kind of divvied the team out, the equity out across three founders. And, we definitely had some strong views on one of the founders was not as strong as what we wanted. They all bonded back together and then insisted on a third split across all of them. And that was, we eventually succumbed to that, but it was actually a mistake because the two key founders actually ultimately felt like they kind of got shortchanged that we wanted to keep, and they left, and the one that we really didn't want to have the retention stayed. So, I mean, as far as lessons learned, I'd say stick to your guns, even if they were threatening to blow up the deal, and I think at that point, we should have we should have called a halt and just let it play out. But sorry.
Yeah, we typically have a high-level integration strategy, even pre-LOI. And so we have a pretty good idea, at least at a high level, of what we want the engineering team to do. And we will actually use that as a lens for deciding who are the key engineers. But how do we actually get, I think your question, though, is more like, how do you get to who the key engineers are? A lot of it really depends on conversations with the management team in terms of who they value within the organization. And we also do have our business unit leaders and technical people go in and talk to them to help also suss out who has the right skills for the projects we intend on having them work on post-close. And then we'll also accordingly adjust the retention to make sure that the people that we are critical to the organization would stay after the acquisition closes.
And we do very similar things. So the business will go in there, they'll work with the founder, CEO, and maybe one or two of the key players to identify who the other key players are below the executive team. And the way we managed it this most recent acquisition is we had a staggered approach. So we looked at compensation in 3 buckets. So the most critical talent, and then the other 2 buckets. And it was a very collaborative process. So we asked the 2 founders to go through and look at the talent. And then we also then shared with them the leveling perspective, how sort of it plays out within our company. And then we sat with them and did a discussion about their talent. So we heard about the people they were most worried about, who they perceived as the key players related to what they needed to accomplish within the business, so tied to what we're trying to acquire them to do. And then we were very flexible in how we moved it, realizing there was a finite dollar pool that we had. So they had to make those trade-offs. And I found it to be very successful when you're getting into that level of collaboration, because as we know, like, this is much more of an art than a science. So you do your best to try to level. If you have to level, you do your best to do that. But you have to also be open-minded that you might have gotten it wrong. So once they join and you start seeing what they're delivering and how they're working in the new environment, sometimes you realize you have to make adjustments. So that's why we start out from a very collaborative perspective. In places where, like the example where we didn't level, it was because titles were very critical. And the culture had high-level titles, senior vice president, executive vice president, and the leveling would have netted these individuals out a director in the company. And as many of you, I'm sure, know, titling is a very sensitive topic, so we elected to not go through that process to sort of maintain the ability to just work with each other. So I think it just depends on also the flexibility you have within your company. Unfortunately, where I am now, or fortunately we have an opportunity, we do level. So we've got to figure out if there's another more flexible way to look at that. Sure. Well, I know my peer was the senior vice president of HR at this business, so I also saw that directly. But what the company became very good at is realizing that each business is going to accelerate differently, and so they were okay to say this is an acquisition. They have their own culture to a limit to a certain degree. We, again, identified 4 areas that we were very clear that we needed to adjust. So we needed to close down their 401k. We needed to remove bonus because the company didn't pay a bonus. We had to move them to a monthly pay cycle, and we had to get them on the PeopleSoft system to be able to process things. And so other than that, we were very flexible in the approach again, and others within the company understood that. So it would always be titled by the business and then their title, so people could recognize quickly it's not a person that's in the corporate mainstream, it's an acquisition that we've done, and then understand that there's going to be those differences. But again, it's a culture. I think if you grow up with that culture, you understand that it's just what's going to happen in this company, and so people were really comfortable with it.
Great. There was, I think there were other questions or comments. Yeah.
Okay, so I do think to a certain degree, when you have different players in the process, they're looking at it through different lenses. So most immediately when you're going in, you have corp dev there, you have finance, you have other elements, and sometimes the business leader is already engaged with the business or comes shortly thereafter. In this particular case, having those in-depth conversations that are much more org-related came after that point, where these types of questions would be more relevant to be asking. And so it wasn't as though the person was surprised we get to close and we're like, see you later. We had these discussions as soon as we realized that this was going to be an issue. And the person was actually very helpful to help us understand who's the next person sort of in command that you would rely on. And then they were instrumental. I think the key there is that you're structuring an exit compensation package that makes it lucrative for them to help you with that transition. And then you quickly get to the next individual or individuals that are seen as the secondary in this, and you start ensuring that they have the visibility and the connection with the employees. So when there's a step away of the CEO, they easily can integrate into that role, and it's quick and it's seamless. So those were some of the things that ended up happening. But I just think in the early stages, other factors were being looked at more critically than the value system of the founder.
Okay.
So that was in a different company. I'd like to hope yes. In HPE, that I do feel like we have an amazing corporate development team and a lot of just wonderful people that are working on it. And so I do feel like they have a very grounded understanding of the pluses and minuses of the leadership team. And so I found great collaboration with our team on the corp dev side, where we're talking very openly about positives and negatives and making those trade-offs much sooner.
I think in the case we had, every CEO I know of goes through this stage where it's like, whoa, wait a minute, this is getting real. And for that individual, it was, whoa, this is getting real, and I don't want to go. And I think at that point, I think the behaviors were that after it all finished out, we kind of spent some time talking with them, that's what had happened, but I don't think even in that moment, that individual was aware that that was what was going on. So I think it's just kind of being more sensitive to that moment, which I pretty much see every founder CEO go through at least once in the cycle. So, but this case, it was just like, wait, this is not quite the right thing for me. I don't want to do this. I want to go back to doing other things. And just, unfortunately, just maybe didn't have the wherewithal to even halt and say, we need to change this process. So.
Good questions, and thank you. Was there other questions that people had? Yeah, I thought there was someone there at the back. Thank you.
Yeah, I'm curious about how you think about, we've been talking about business culture, but how do you think about just global, as we expand globally and build our brand abroad again and buy companies in EMEA, APAC, how do you deal with culture from that perspective? And how do you adapt some of the things that you would normally do that are clearly understood here in the US to, those deals?
Okay, I'll take that one, Susan. That's a great question. For a really, really long time ago, I was part of this deal that was a small international transaction. And, at the time, how we decided to deal with it was we decided to take a very seasoned senior executive who's very, very well-liked and connected within Intuit and send them overseas to kind of run the operations and run the business down there, thinking that it would be a great way to import culture into this foreign office. We did have quite a lot of learnings from that, but the main one, I'll just share the main key takeaway that we had from that one, which was when you're entering, I'm sure this is something that most people in this audience know, but when you're entering a brand new market that you haven't been a part of, it actually really helps a lot to have local expertise and someone who understands how to work for a large multinational, potentially American company and have those connections and also understand what the working norms are there. Which is, in that case, ultimately what we ended up doing. We ended up bringing in someone who had that experience, and that really helped in terms of bridging the culture gap. But I would say that was a learning for us, and that's something that we would apply going forward.
I think getting that outbound talent is really helpful. And in a couple cases, we've actually searched for people that are from that nationality, and seeing if we can kind of maybe, hey, would you like to go back to work in your home country? And by the way, can you be an ambassador for the company? That's actually played out a couple times. And one time we even scored well that they actually had come in from an acquisition. So it was like hitting all the buttons at that point. But that was just luck. But I definitely think local talent or experience is really important.
And
Go ahead, please.
the example that I have is a company that was acquired in the UK. And what we did, this was when I was at Microsoft, we leveraged the local team. So even though the business reported into a different line, there's usually like a general manager or someone, country manager, that's in location that can have more day-to-day connection with them. And regardless of whether the business is different or not, they can help them understand the culture, the finances, other things that'll be relevant for them to run their business in a time zone and in a location that's easier to get to them versus having someone based in the US. So we've created the support structure both on the HR, finance, and other sides to be able to support them in that location or close to that location. The other thing is, I found that it's a good thing to have like a business operations person that's sent out there. So not necessarily a very senior person, but someone that's just there to help block and tackle, help them understand, make connections. One of the biggest things that we see as an opportunity is just, how do I who's the person that handles X and Y? Like, I don't know anything about the company, and now I'm away from the mothership, and how do I make those connections? So putting a business operations person or people there has been really helpful too.
It was a great question, actually. The survey that we did on culture, one of the things that became very obvious was in different geographies, there are cultural biases that exist within that geography that are different than they are here in the United States. So that's a great question. It's something that you need to be sensitive to when you're doing international transactions, because the local geography, the culture there, just the nature of the country itself can affect the culture that occurs in that country.
Yeah, if I could just add, I think one of the things I also learned was, we have to put ourselves in the shoes of the country.
Yep.
And so what we've done in the past is, like, for a deal in Japan, we did a day-long culture training ourselves.
Yep. Good.
How to engage, what are the signs, how to, exchange cards, simple things like that,
Yep.
that really allow you to start the relationship, right? So you're not the, US-centric company somewhere, so.
Absolutely.
I was going to just add, just don't assume that if it's in the Bay Area that it may not be a national culture that's unique here, because I did one acquisition where the entire team regularly spoke Russian in the office, because they were all from Russia, and so they were all in the Valley, but yeah, it was very much a Russian culture embedded here, so it was one of those, you wouldn't have expected that.
Any other questions or comments, thoughts that you want to share?
I have a few comments about culture. So
Good.
we acquired Black Duck in December. I'm from Synopsys, and we acquired the entire headquarters, which included a lot of G&A people. And most of the culture integration centers around people who stay with the product, who stay with the business group. And we learned that the finance teams who got integrated into our G&A infrastructure, they have suffered a lot in their loss of identity and culture. It was a twofold thing. And so I'm really curious if anyone else has encountered that at all, because we really have, it's been hard for them.
Yeah, no, absolutely. Absolutely. Anyone from the panel want to talk about that?
I think it is an area that sometimes you can miss. I mean, another example I've seen actually is where we acquired a company, and their new product introduction team, the folks that actually built the hardware, was better than our host organization. So we actually had to do the other side, which is we kept that organization and kind of riffed our original team. And that caused another kind of set of issues there, because it was just, they were so much better. So yeah, these are those, I think, just don't forget about all the other pieces. I mean, it's very easy to focus on, who are the value drivers.
Yep.
And in the examples I'm thinking about, it has been a challenge. And most of the time, there's also additional limitations, like folks don't want to relocate, or there's some other challenge, just makes it difficult. And unfortunately, it does sometimes lead to workforce reductions. In the cases where it hasn't, we've either had the flexibility of geography, and we can place some of these G&A function area folks in different places and still supporting mainstream businesses outside of the acquisition. And wherever that's possible, we certainly will do. But to the point you're making, I think the way I'm reading it is losing their identity. And so that it's hard, especially if they're remote and they're 3 people or they're 5 people or they're 20 people. So the best thing I can see in those situations is trying to connect them with their peers, regardless of where that peer set may be, the closest peer set. So there is that ability to collaborate and connect and feel as though they're part of something bigger. And hopefully that can help to some degree. And there's certainly, again, with taking geography off the table, if you have the ability to be close, certainly the decision of whether you sit them with that group or you sit them with the business is another factor to consider.
But in deals, they're a group that often feels very vulnerable because, the buyer and the seller both have them. And, when you're thinking about efficiencies, recruiters also know that, by the way. So they're also quickly, when a deal like that gets announced, they're quickly targeted by recruiters looking to, place them somewhere else.
We try to be really transparent about what happens with the G&A functions precisely for that reason.
Yeah.
And as a result, we'll usually keep our reporting structures intact with the exception of G&A, which will report directly into the functional teams in Intuit corporate. And what we do at that point is we try to make sure that they're incorporated into the right operating mechanisms, which for us is just meeting cadences with who would be their peers over in corporate. We also tend to do a lot of co-location with G&A, because especially for finance, we actually need them to close the books because they're the ones who understand them, and nobody else does, at least initially. So we'll typically, if it is a remote location, we'll typically send out someone from finance to work with them on that process, and there's a lot of cross-training and learning with the hope that they end up feeling less isolated.